On the tails of that blowout report we saw on Friday, 292,000 ads, keeping that average of well over 200,000 for the last 3 years. The job market is hot. I think, to take the other side of that, people are worried about wage growth not growing fast enough in all sectors. I still think it is growing. Some of the other problems we're seeing is perhaps household creation is well below the 5-year or even 10-year average, something that is worrying central bankers in the U.S. But yeah, the JOLTS report, the labor market is red hot.
I suppose the Fed really can't consider, though, the labour market in isolation, because obviously it comes down to a whole combination of factors, a whole lot of good data points pointing in the right direction. They really need to see that hard evidence of inflation picking up as well. But the question is whether they'll actually see that when these low oil prices are undermining their ability to lift that inflation.
Yeah, you're exactly right. The oil price, commodity prices in general, we keep saying it's transitory, but it's going to be a little bit longer than transitory, I suppose. But the way that the government calculates inflation, it's about 0.5% at best, 1.5% below the target. But if you look at the blended rate, the non-tradables, et cetera, I think we're a lot closer to our target than anybody would suggest. And also, we have to remember that inflation is something that's really hard to predict, hard to measure. And I do think that the Fed may be looked at or perceived as being a little bit dovish, because I think they might try to get ahead of it by having those 3 rate hikes that I'm talking about in 2016.
So how long, do you think the rout in these oil prices will continue? I guess it is really difficult to tell, isn't it? But are you one of those that believe that we'll see oil prices sitting in the $20 handle?
I don't. But again, I'm just dumbfounded with how sentiment can rule a market. For all these years I've seen that and I say that, but it happens over and over again, and oil is the latest commodity to show that. The fundamentals would suggest that supply is dropping, just not dropping nearly as quickly as it should. From the U.S. peak of 2.7 million barrels a day in April down to 2.3 million. It's not dropping fast enough. Iran could be back online by the end of January, et cetera. So I don't think we're going to see 20. I think we'll see 40 to 50 by the end of this year.
Larry, it's Gaurav Sodha here. In the past, a collapse in the oil price of this magnitude would have been considered a boon for the U.S. Consumer.
Yes.
Is that still the case now that the U.S. is such a big producer? And have we seen consumption habits change at all?
Yeah, that's a great question, because the thing that I was completely surprised by was the lag in data with regards to the dropping oil price and how it filtered through to spending in the U.S. As you're well aware, U.S. citizens don't save money. All we do is spend money. We consume things. We don't even know what saving means. So it took a long time, but I do believe that pass-through is going to continue for weeks and weeks and months to come. And to your other point, yeah, we've become a lot more of a producer than we are a consumer of oil, but we also have to remember that the cost curves have gone down, and surprisingly so. Even 6 months ago, the U.S. was predicting that the cost curve, the break-even point, was like $60 a barrel, and then we find out it's closer to 45, and who knows, technology might even have it less than that. So all in all, I still think it's an economic boom for the United States.
It's also really interesting because this commodities rout seems to be deepening and worsening despite China's efforts to obviously shore up its currency and try and stabilise its markets. But the market really doesn't seem to be looking at that, particularly the commodities market, and obviously further falls across all of them. Copper as well, also very much under pressure. Why do you think that is the case? Why has the commodity market not taken comfort in the fact that they're trying to stabilise their markets?
Yeah, I think it goes back to sentiment. It sounds very pedestrian, very low level, but I think that's the bottom line. Last Tuesday, when the SRB in China announced, at least let the news leak out, that they were going to be purchasing from their smelters, the top largest producers in China, and that even in itself didn't lift prices. I don't know what will. I mean, they're telling everybody, hey, we're going to start buying copper in our policy. I think it's sentiment until that shakes out. If I become bearish on oil, if I become bearish on copper, that's when we're going to turn around. I think it's when the last person throws in the towel, that's when it turns around, because the fundamentals don't make sense right now. I think it's sentiment driven.